Hey everybody, this is Aperture, and in this video I'm going to show you a few methods that can help you determine whether the trend is continuing to the upside and pick that exact moment where you should enter a position for that next move up. This video is sponsored by Crypto.com, the only single exchange that allows you to trade in more than 200 pairs with up to 10x leverage, get access to more than 40 quarterly futures and perpetual contracts, and purchase newly listed tokens at up to 50% off. Find all the information right at the description of the video and earn extra $50 USD worth of CRO using the link below. So in this example, I'm going to show you how you can determine whether a trend is continuing. And I already have done a few videos on moving averages, so if you've missed those, search them in the Burp Nest YouTube channel and see if you can find the moving averages examples. In this video, I'm going to talk about how to determine once price has touched the moving average that it's continuing the trend up and what to look for if you want to confirm that trade. So let's start with defining an uptrend. In this case, I'm going to use the 55 EMA. I have a 1 hour chart, and on a 1 hour chart, price often retraces towards that 55 EMA. As you can see here, price has gotten above that 55 EMA, and it is touching it over here. The question then is, like, how do I confirm that it's continuing the trend up and not breaking down as it did here? Because if you're putting on a trade, you want to enter as close to the optimal entry and you want your invalidation somewhere below that. But how do I see if this moving average is really holding? Well, it's fairly simple. And if we zoom in, we can see over here that there are a few touches of that moving average. So you can see that there are some wicks and some buyers stepping in. But what you actually want to have for profit is price going up. So you need buyers to push forward and sellers not stepping in. And you can also see that because of these candles. So the first method is basically just looking at a candle. This is the consolidation on a moving average. And over here you see a green candle pushing forward, and that could already be your entry. So if you see this candle close, you have that buying pressure confirmed, you can set your stop loss somewhere below the moving average, and then you can either set higher targets, whether it's over here, or move your stop loss up with that moving average. So that's the first method. Just look at a bigger candle after that consolidation or that touch of that moving average. What helps, in my opinion, is adding another moving average, a shorter period moving average in this case. So you could add, for example, another moving average like the 10 EMA. By using a shorter period moving average, you can see if momentum is continuing. So in this case, also on this candle, you see that the candle closed above the 10 EMA. And that shows the momentum coming in. And often when there is initial momentum coming in, you can see that momentum continues after. So that's like the second method you can use to spot that momentum. The third method is actually also quite similar. And funnily enough, they all point to the same candle. I added the Stochastic RSI, and you can also use that to see whether trend is continuing and that momentum is coming in. So what the Stochastic RSI measures is momentum, and if you see these lines cross, that is an indication of momentum. So in this case, if you want to go long, you want to see these lines on top of each other, and the blue one, in this case, above the orange one, signaling that momentum. And that's actually the case already on this green candle, but on this green candle, they really start to fan out. So all these three methods point to this candle being the confirming candle for the trade. Let's look at some other examples too, and then we can see that all these three methods point basically to the same thing, and you can also use them together to get a quicker view of what's going on in the chart. Most indicators are actually pointing to the same stuff in the chart. It's just how you want to visually represent it. So over here, we have quite a similar example. It's only a little bit more noisy. So what you can see here is that price touches that moving average and then shows some momentum after. So you could already enter after these few green candles because it shows initiative. But if you want more confirmation, you could wait for that stochastic RSI to cross, or to cross here with price crossing that 10 EMA. So somewhere between here and here, you could enter a position, which is still quite close. So you can set that stop loss, set your targets, maybe you pick a resistance over here, and then you have a fine trade. You can also use these methods when you are shorting. As always, play the trends, and if the trend is down, you can also short. So let's see what examples we have for shorts. So over here, I have an example on the short side. So as you can see, the trend is down because price is moving below that 55 and tries to get above the 55 over here, but finds sellers and they push price down. And this candle here shows that initiative because it broke down the 10 EMA. It's a bigger candle that breaks down below these closes and opens. And actually, if you look at the stochastic RSI, it already crossed to the downside. So that one was actually leading up already and showing there was that initiative. You could also have triggered it basically on this one because the wick and the red candle point to sellers stepping in. So either this candle or this candle can be used to pick that short trade. And then you would have entered somewhere around this level, maybe set a stop loss there, and you could have shorted this. Another example is here on the right. You can see that the chart is a little bit more noisy, but still price failed to get above that 55 EMA and is rejecting it. So what you need to look for is that initiative from sellers to push price down and continue the downtrend. So over here we have a good example where price fails to get above, there is that initiative, that big red candle, it breaks below that 10 EMA, and then price continues on the way down. That also lines up with that cross of the stochastic RSI. So you could pick this as an entry, place your stop somewhere above that level, and then short it all the way down. You could have picked this candle too as initiative because it's also rejecting and it's a bigger red candle. Of course, you enter here. You wouldn't have gotten stopped out on this trade because this doesn't break above that level, and it shows that sellers just needed more time to step in and buyers couldn't push through and change that trend. These were three methods: the engulfing candle, the 10 EMA, and the stochastic RSI to confirm that continuation in the trend once a moving average is rejected. You can use this both on long and short side, so I hope you find a good opportunity to use this new knowledge. Feel free to reach out to us in the Burp Nest, so visit theburpnest.com if you have any questions. Thank you for watching and see you in the Burp Nest.